Hey, what's going on, guys? My name is Richard Moglen and welcome to this week's Stock Market Outlook video. So this past week we finished down about 2% and we had some pretty bad days on Monday and Friday. So what I'm going to do in this video is go through technical analysis of the charts, look at IBD's big picture, as well as go through wishingwealthblog.com and kind of see, based on all these different sources, what the consensus is about the market direction. So starting with the IBD Big Picture, they discussed the big slide this past Friday with the S&P down 1.8% and actually testing its 50-day moving average now for the first time in a long time. And you can see that the Dow Jones was down 2.1% as well, and the NASDAQ down 1.6%. So the biggest down day in quite a while. We've really just been going up and up ever since October, which is pretty surprising. And I had a feeling that this uptrend was getting a little bit tired. They also talk about how it was an outside day, which means that the price range engulfed the prior day's range, and it actually gapped up and then closed all the way down below the low of the previous day, which is like the worst price action that you can have. But overall, they've changed their current market outlook to an uptrend under pressure. And they also discuss how the Russell 2000, as we'll look at in just a second, also tumbled 2.1%. This past Friday was a distribution day, and they talk about the rise in volume on these down days, and they give some suggestions about selling your stocks when they fall below that 7 or 8% mark at the latest. Really, you should be going and aiming for a much smaller loss than that in order to keep that good gain to loss ratio about 2 to 1. But basically, they discuss a little bit how the coronavirus is affecting the market, but you don't really want to deal with news. What matters is the price action, and that's what we'll look at in just a second with the charts. So now turning over to wishingwealthblog.com, Dr. Wish hasn't posted this past Friday. However, on this past Wednesday, and actually discussed with them in person that day, he was hedging his bets with an investment into gold, which has actually been doing very well recently. However, we still have a GMI 6 out of 6, although that's probably weaker since this past Friday, and the current GMI signal is still green. I also want to add in this video that if you haven't checked out Dr. Wish's site, such as his recommended reading list, his favorite posts down here, he's got a bunch of great educational content here that really describes his strategy very effectively. So I really recommend that you do this if you haven't checked it out before. But now that we've talked about both the IBD Big Picture article and the GMI signal, let's go ahead and look at the indexes for ourselves. So going to the daily chart, we'll look at this trading week, and let's hide the drawings here. And you can see that on this past Monday, we gapped down all the way below the prior week's low. And since then, we did a little bit of a recovery in the middle of the week. And then on Friday, we were really hit hard. So for me, this past Monday was a warning signal. And I actually trimmed out a lot of my positions on this Friday. And then when it was confirmed on this Monday, I really sold a lot of my shares. And then on this past Friday, I was a little bit protected because I'd already managed my portfolio and lowered my risk somewhat. So on these days where after a big down day like this, it rebounds a little, maybe take a little bit of time and sell into strength your weaker positions and just get rid of those C stocks and only keep those A's. That's just a suggestion for you. But overall, you can see the volume coming in on Friday, Monday, and this Friday, which isn't a good sign. Scrolling back a bit, you can see that the NASDAQ is now approaching its 30-day moving average, but it is a stronger chart pattern than the SPY, which is actually through its 30-day moving average and testing its 50-day moving average and is below the lower Bollinger Band. So really some severe weakness showing in the SPY. And going to the daily Guppy chart, you can really see that we're almost touching the blue lines here, which isn't a good sign, and it could mean that the uptrend is coming to a close. Now taking a look at the IWM, the Russell 2000 index, you can once again see that there's a lot of weakness with the mid-cap names. I noticed in last week's video that we had 5 down days in the Russell, and that told me to once again be a little bit more defensive because you want to see all the major indexes acting well in order to be on the gas pedal and being aggressive. And this past week was no different. Since this peak, actually, let's see what it's dropped. So it's dropped 5% over the past 2 weeks. And this past week was probably the worst of it, with a big distribution day on the IWM this past Friday. And looking at the daily Guppy chart, it's broken the pattern and is actually in danger of becoming a blue, white, red pattern like it was in October of 2018. So you're seeing some major weakness in the indexes. And no matter what, my recommendation is it's time to be more defensive. Get rid of your weaker positions and definitely be very selective when taking up new positions. And the last ETF that we're going to look at is the FFTY, which you can see also had a very poor day on this Monday, and also another big distribution day on this past Friday. So growth stocks as well are getting hit. And if the major indexes were kind of showing weakness, but the growth stocks were doing all right, that would be a better picture for the overall market, because the growth stocks somewhat lead the overall market. But that's not the case here, and you're kind of seeing weakness everywhere. So once again, it's time to be more selective, more defensive, and make sure that you protect your capital at all costs. And before we actually go and look at the growth stocks from my past watch list, I do want to quickly look at gold's chart for just a second. And you can see that it had a green dot on Thursday of this past week. And so far it's been doing very well, and it had a nice update on this past Friday. So this once again tells you that people are moving their money from the more risky investments to gold and silver and kind of more long-term low risk investments. So this is just to kind of keep you informed. And now let's go ahead and look at my watch list from this past week. And this week, only 6 out of the 14 stocks were in the green for the week. And that is an outlier in how my previous watch lists have done. If you remember, in the previous weeks, there's been like 75% that were green. So this, again, gives you an indication of the weakness in the market, because if you follow the major growth stocks, you can see that their charts are overextended and maybe pulling back. But starting with Dexcom, which was my best performer of this week, it's showing remarkable relative strength with all these down days. However, it did try to break out this past Friday, and then it fell right below the kind of point of resistance here at the 242 level. This is one to watch because it's showing such good relative strength, and it has very, very good fundamentals. Next, we've got PLMR, which is also showing pretty good relative strength. On the Monday, it actually made some good gains and wasn't hit too hard on the distribution day on Friday. So again, a very good fundamentally ranked stock. It's a recent IPO forming another nice consolidation base here. And once the overall market turns back around and resumes another uptrend, this could be one to buy some shares in and hold until the trend breaks. Next, we've got STNE, which is still consolidating nicely below the green line. And once again, it's showing decent relative strength. However, we did had a down day on this past Friday, but it was a green dot day. So this is, once again, one to watch when the overall market turns around. Looking at Lulu, you can see that it did sell off on this past Friday. However, it was on below average volume. So you're not seeing a lot of investors in Lulu running to gold or other investments, which is a promising sign. However, you can see that on Monday, you had a big drop. So this still is a nice flat base here near all-time highs, and it's not showing any major signs of distribution at this time. Next, we've got Ping, which is another recent IPO. And again, it dropped almost 5% on this past Friday, but it was below average volume. So again, not seeing any major signs of distribution here. However, I don't think it's a good investment at this time. Moving on, we've got PFSI, which is still just consolidating under this line here. And on this past Friday, again, it showed pretty decent relative strength and didn't drop too much. Next, we've got TTD, which is still forming this big cup and handle pattern and hasn't shown any signs that it's ready to move up and test the handle. So still one to watch because it's a leader in the software names, but I don't think it's a good investment at this time. Next up, we've got Cash, which is still testing its green line here and actually tried to have a breakout this past Thursday but still got knocked down all the way back into this flat base here. So you're not seeing any major signs of distribution here, and this one does have pretty decent fundamentals, so this could still be on your watch list. Moving on, we've got CZZ, which dropped on this Monday and Friday, but it still has a pretty strong weekly base. And if you're worried about how your investments are doing, I would say go on over to the weekly chart, because I think that gives you a clear picture of the relative strength of that company, because it kind of takes out that daily noise and just lets you see the bases that are forming and whether or not it's really broken through the bottom of that base. And CZZ, I'm not really seeing any indication of that. It actually rebounded off its 10-week moving average this week and is barely down this week at all. So if you're worried about your investments, I would suggest take a look at the weekly charts. Next, we've got AEM, which you can see for the week dropped down a bit after trying to break through the resistance here. But overall, I think it's showing pretty good relative strength. It's still within this Darvas box here, and just kind of balancing back and forth. So this past Friday, it was actually up, which does show pretty good relative strength. So this could be one to watch in the upcoming weeks. Next up, we've got PAAS, which actually had a green dot and an up day this past Friday. So this might be one to watch if the overall market turns around, because it's showing very, very good relative strength. Next up, we've got CDLX, which is still just going sideways under this resistance at 90.5, and it's not really showing any signs of major distribution. In fact, it's just kind of tightening up, and you can see that volume is also decreasing as well. So positive signs from CDLX, even though it was down 3% this past week. Next, we've got HHR, which really kind of broke down this past Friday. You had 4 straight days before that of selling as well. So I don't think this will be on my watch list going forward. And finally, we've got PGNY, which once again had 3 straight days of selling. And on this Thursday, you had above average distribution. So once again, although this is a recent IPO, I think it really has to prove itself and move upward once again before I'll add it to my watch list. So that is how my previous watch list did this week. I would say that currently we are in an uptrend under pressure, and I would caution you from taking new investments at this time. And instead, I would focus on risk management and kind of cutting out those lower tier stocks that are in your portfolio. But thanks so much for watching, guys. Please remember to leave a like down below if you enjoyed this video and found it informative. And I'll see you guys in future videos.